What happens? Does the dollar lose global reserve status? Does it go into hyperinflation? Like, what do you think happens?
Well, I mean, first of all, it depends on how you define hyperinflation. I mean, are you talking, Weimar Republic, Zimbabwe, stuff like that, or, countries that have had high rates of inflation, but maybe not, like where they completely destroyed the currency, where you're talking about, trillions to buy a cup of coffee. We're going to have very, very high inflation at a minimum. And I'm talking about worse than the 1970s. That may not constitute hyperinflation, but it's going to be pretty bad. I do think that the dollar's days as the reserve currency are over. I kind of have a hard time imagining a final scenario where the dollar retains reserve currency status. So I do think it's going to lose that status. Where I'm not sure when the date is. I meant to look that up, but we're almost at 50 years since we went off the gold standard in 1971. And the dollar should have been rejected at that time as the reserve currency, because the only reason it was the reserve currency was because it was backed by gold. And, a lot of people now try to say that, they're talking about the debt ceiling and, we can't default on our debts and America has never defaulted. That's not true. 1971 was a default. We promised all of our creditors to repay them in gold for their Federal Reserve notes and for their U.S. Treasuries. And then we defaulted and said, we promised to give you gold, and now we're going to give you nothing. And so the dollar should have lost its reserve status then, but it didn't. The dollar got marked down, but it didn't get, counted out. It held on to that status. So I think the next move is for the world to totally reject the dollar and to go back to the monetary system that existed before the dollar, which was gold as the primary reserve rather than U.S. dollars.
All right,
but
hold on. Don't get into the gold stuff. Yeah, we're going to do that in a second. What do you think inflation is right now? So the May number for CPI was 5%. What do you think inflation is? Are they right?
Well, first of all, inflation is the expansion of the money supply. That's the actual definition. And so money supply is growing, 20% a year, 30% a year? It's really, really big. Now, as far as what is the actual increase in the cost of living, the consumer prices, which is what most people think about when you talk about inflation. Well, the way the government measures it using the CPI, if you annualize, the first half or the first 5 months of this year, I think we're running at about 8% a year increase in the cost of living. But I don't think that accurately reflects what's really happening with prices, because I don't think the consumer price index really captures the true extent to which prices are going up. So my guess would be that right now we have annual inflation probably between 10 and 15%. Right now, that's what Americans are experiencing as far as their cost of living, which certainly rivals or exceeds the worst of the 1970s. So we've already got that. The thing is, the Fed and the government is telling us, and everybody is telling us this, that it's all transitory, that this is all just related to the reopening of the economy, and so we don't have to worry about it. But that's not why we have this. The prices are going up because of what the government did in response to COVID, not because of COVID, not because of the reopening. It's because of all the money printing. It's because of all the deficit spending. Yes, the fact that we're not producing as much stuff is part of the problem. A lot of people aren't working, and so they didn't make stuff. But the problem is, as we made less stuff, we printed more money. That was a huge mistake. We should have printed less money. The Fed should have drained liquidity as the economy contracted, not added it. They just threw gasoline on the fire. So deflation is going to get much, much worse. What people are experiencing now, the only way this is transitory is that we're transitioning to much higher inflation.
All right. So if we're now at 10 to 15%, what do you think is likely if they continue on the path that they're on? They continue to print trillions. They continue to keep interest rates low. When you say much higher, is that a 25%, 30%, 50%? Like, is there a way for you to kind of identify what you actually think we could get to in the near term in terms of the continuation of their policies?
Well, look, I mean, we can continue with 15 to 20% inflation for a number of years. And if you think about what that means like the Dow Jones has to go up 15, 20% just to stay even, right? Your house has to go up 15 to 20%. And that's actually happening right now. I mean, if you look at real estate prices, around the country, I mean, they're really going up. I mean, even more so in Puerto Rico, it's more like they're going up 15, 20% a month. But I mean, all around the country, you're seeing this. But it's also consumer good prices that are going up. I mean, I get emails all the time. People share with me the announcements of price increases that they're getting, either from their company, where it's their employer kind of letting all the employees know, how much prices are going up, or they're just sending me their consumers and they've gotten notices from various companies that they buy from, letting them know what the price increases are. And they're huge. I've never seen price increases this much. And it's not like we're just making up what we lost during the pandemic. These are huge increases from where the prices were before the pandemic started.
So when you start thinking about kind of what people can do with this, right? If inflation's high, how do you think about where they can actually put capital in order to protect it? Is it something where we all know that you're into gold? Is gold the only answer, or are there other types of assets that you think are worth folks looking into or kind of doing research on?
Well, what inflation does is it wipes out the value of paper assets. So if you have cash in the bank, inflation is bad. If you own a bond, that's even worse, because people are now going to pay you your money that you loaned them, but they're going to pay it back in the future. Well, if you have inflation, money in the future is worth even less than money in the present. So the longer the duration of that bond, the more of your purchasing power you're going to lose by the time you get your money back. So you don't want to own bonds. You don't want to have cash value in things like annuities. Let's say you have an annuity and it's going to pay you a fixed return. Well, that return is going to erode away in purchasing power as a result of inflation. So you don't want a fixed annuity. You don't want cash value in an insurance policy. What inflation does is it transfers purchasing power from creditors to debtors. So you want to have debt that will get wiped out, but you don't want to just go out and borrow a bunch of money and buy consumer goods, because you still have that debt. The consumer goods are gone. You want to buy real assets that generate income that can service the debt in the short run, and that will ultimately retire the debt in the long run as the debt is destroyed in value relative to the assets that you own. So you want to own real stuff in inflation. You want to own assets. And so what I own a lot of stocks, a lot of common stocks, looking around the world at what you can own, whether it's real estate or stocks or collectibles. I think that value-oriented stocks, dividend-paying stocks in countries like where I am here in Switzerland, I think there's still a lot of value in some of the Swiss stock market and other countries that I invest in. I think that relative to other assets, and I'm looking at property while I'm here, and I think residential real estate is very expensive compared to what I can buy publicly listed companies for and the dividends that I'm able to get. So I think that being an equity owner of a business in a country that is not nearly as screwed up as the United States, has much sounder underlying economic fundamentals, where I can see real investment value in the stocks, meaning the PEs are not too high, the dividend yields are not too low, well-managed companies, been around for a long time. So I like owning real stuff. I don't want to buy the bonds of these companies because inflation will destroy their value. I want to be the equity owners because the stockholders benefit when the bonds are destroyed, because that transfers purchasing power from the creditors to the equity investors. But I also want to own gold as a commodity, because what you're doing with inflation is you want to preserve your purchasing power. So the price of everything that I'm going to want to buy in the future is going to go up. Well, the price of gold is also going to go up because there are people who need to buy gold. Jewelers need to buy gold because they got to make jewelry. Computer chip manufacturers need to buy gold because they need to conduct electricity in their chips. The dental industry, the aerodynamics. You got a space race going on right now. Well, they need gold to get up there. There's a lot of industries where they're going to be buying gold in the future, and it's going to be more expensive, just like everything else. So I don't want to buy a bunch of oil because I got no place to put it. I don't want to buy a bunch of wheat because I mean, where am I going to put that? It may not, stay. Eventually it's going to, rot. And, the shelf life of a lot of the things that I might want to buy in 5 or 10 years. I mean, I can't buy it now, but I can buy the gold now.